Hey everybody, hope everyone's doing well. This is a brief recap of the Emini 5-minute chart for Tuesday, January 7th, 2025. I gotta keep it short today. I just want to talk about the first couple of hours, talk about my trades, and that's about it. The reason why I've been focusing more on the first couple of hours in these reviews is because I've only been trading the first couple of hours, so that's been my main focus. And if we think about, first of all, the reasons why are presented to us by Al in the books and in the video course, but it wasn't until I talked to Brad about it that I was really convinced to give it a try. I always wanted to, it kind of went full circle. When I first got into trading, I thought it might be cool to learn how to trade the first couple of hours, and then, be done with work for the day after just a couple of hours and get my time back. But over time, I started trading and I would trade all day long. And so it's gone full circle where at this point, I only trade from 9:30 to 11:30 or maybe noon. And the reasons for that, one reason is the open of the day. If we think about the day structure and split it into three parts, there's the open, the middle, and the end of the day. And today's actually a pretty good example of that three-part structure, where the open of the day and the end of the day usually have decent swings. The middle of the day, usually more two-sided trading range price action. So here, we had a bear swing on the open, lots of trading range price action through the middle of the day, and then a bear swing, trend resumption at the end. And so I figured if I can just figure out a system that I can trade, and if I just deploy it for the first 2 hours every day, there should be plenty of time in the first couple of hours to at least take one trade, if not more, and maybe catch the opening swing trade or some kind of trade, and that should be enough. Because also, again, if you know the Brooks trading course, you know when Al talks about the chair maker, and basically trading is not like other jobs where your output is directly proportional to the input, the amount of work you put in. It's not really, you don't get exactly what you put in. You don't get brownie points for sitting in front of the screen all day. So if I can make 10 points trading the first 2 hours or 30 points trading all day, I think I'd rather take the 10 points in the morning and just continue to scale up my position size. But that's me personally. So here's the first couple of hours of the day. We had this tight bear channel going into the close of yesterday. We gapped up, and this is a trendline break. So from down on bar 78 up to bar 1, pretty significant trendline break. Bear trend, trendline break. Now we're probably going to test the lows of the trend. I usually draw the prior day's low and the prior day's high. Oftentimes they are meaningful support and resistance, but here, going into the day, trendline break, expectation, probably a retest, and then either a trading range, or we might go for, the market may try to have a major trend reversal to the upside. So far, it looks pretty good for the bulls, the trendline break, but then bar 1 closing on its low. Reasonable stop order sell below bar 1. It's far above the average price. It's a good bear bar. And then bar 2, consecutive bear bars closing on their lows. Good for the bears, and already, right away, bars 1 and 2, stronger than the bulls would like to see for a retest of the trend. Ideally, in the strongest major trend reversals, we would get maybe this trendline break, retest of the 50% pullback, and then higher low, major trend reversal. But here, right away, looks like bars 1 and 2 are strong enough that a second leg down is likely. There are trapped traders above, traders who bought the close or bought the open of the day, bought the low of bar 1, bought the open of bar 2. Pretty much all through here. It wasn't really possible to make money buying, but because there's a buyer and a seller on every tick, we know that there are trapped traders above. So any pullback will probably lead to a second leg down. So that makes bar 3 more of a sell the close bar, because it looks like it's about a 50% pullback. And the bears, like I said, will probably get a second leg down. So 3 might be a buy vacuum test of resistance. We're testing the bar 1 low, 50% pullback. As good as bar 3 looks, it's really not even a bull breakout. It's really minor. We're not even breaking out above the prior bar's high. So like I said, might be a better bar to sell. So probably sellers above, scaling in higher. And then 4, reversed back down. Low 1 short, it's a deep pullback. And on a smaller time frame, it's probably 2 legs up with a low 2 short somewhere within bar 4. Lower high, double top, second leg down likely, probably going at least 1 tick below bar 3. So there's a reasonable stop order short below bar 4. 5, we tried to continue up, and there's a second leg up for the bulls. 1, pullback, 2, but we did not get above bar 4. Bears, if they had stops above 4, defended their stops. And bar 5 is disappointing for the bulls. Traders were trapped up here on bar 4. Some unlucky trader bought the high tick of bar 4, and when the market came close to retesting that price, what do you think those traders will do? If you bought the high tick of 4, this was your entry bar, you're disappointed, probably look to get out at break even if you have the chance, or with a very small loss. So now 5 might be a sell the close bar. This may be the start of the second leg down. We have a micro double top, now a low 2 bear flag, and again probably going at least 1 tick below bar 3. 6 bear bar, but tails pretty much a trading range bar with lots of overlap, bars 2 through 6. It's breakout mode, and the market's deciding, are we going to have this bear trend line break? Is this a higher low, major trend reversal retest, or do we have to test lower? Because most bars are breakout bars, you can usually count on the prior day's high or prior day's low being broken out of. At this point, if we just simply look at it visually, here's the prior day's high, prior day's low down there. We're just about at the midpoint, just below the midpoint of the two prices. So maybe it slightly favors that we will test lower. But the big picture, this is a big bear breakout. This is a reversal attempt, but the reality is this red line is a 50% pullback of this sell-off. And so we got the cap up, and not even bar 1 couldn't even close a bull bar. The market rejected the gap up, and then we reversed below the 50% level, tried to get above it again, failed, tried a third time, and now we're turning back down. So bear bar closing below its midpoint. You might have some traders selling below 6. You're at the bottom of this trading range. Some traders will buy below 3, betting that it's a trading range open. Buyers below, moving average support, big enough breakout for a second leg. And then those traders who bought really anywhere got trapped on bar 7. So 7, big bear trend bar. The problem with 7 is the overlap and the breakout distance. It broke out below a few bars, but not all the bars to the left down here. So it's a good looking bar, but the bears still need follow through. But big enough breakout, trapped traders above, second leg down likely. Follow through selling on bar 8. First reversal will probably be minor, so sellers above bar 8, scaling in higher. Now we're getting more two-sided. Bar 9 overlapping the majority of bar 8. Might have a spike in channel. We're channeling lower. 10, not a very good stop order buy signal bar, but because of the market cycle, we could test the high of bar 8, the start of the channel, which might be the top of a trading range, and a measured move up of bar 10 takes you right there. So selling directly above bar 10 might not be ideal, but selling maybe 1 times the bar range of bar 10, maybe selling at the bar 8 high, is a more reasonable trade. Second leg down likely, traders will sell a pullback. You can see what bar 9 did. Back up. Broke out below yesterday's low. 9 tested yesterday's low, found sellers. This was a breakout pullback, sell setup, and traders made at least a scalp. 11 bull bar closing on its high, but minor reversal. Lots of overlap, similar to bar 3. Good looking bull bar, but look to the left. Big sell off, not even above bar 8. So probably sellers above, but strong enough rally, second leg up likely. So bears, rather than selling here, they may wait to sell higher. And 12, we ended up rallying a little bit higher, and then a bear bar closing on its low. But again, 10 through 12, the distance from the low of 10 to the high of 12 is big enough that if you're a trader who, there are trapped traders below. So if you sold down here, anywhere down here, let's say you sold the low tick of 10, maybe you sold above bar 10, not the worst trade in the world, maybe not ideal, but not terrible. You sold here, bar 11 trapped you, and 12 further trapped you. So you might have some support at the bar 10 high. So 12, rather than sellers below the bar, there may be buyers some distance below, maybe directly below. I think a second leg up is likely, but in the big picture, in this kind of context, with this sell-off, probably better to look to sell. 13 coming back down to test the lows. Looks like we're in a channel phase at this point. Breakout, pullback, channeling down. So probably buyers below 10, bears taking profits, bulls buying for scalps. But 12 and 13 strong enough for a second leg. Not ideal to buy after 13. Maybe better to wait for a second reversal. We sold off further on 14. Now a 3-bar micro channel. Another decent bear breakout, second leg down likely. But I said we're channeling at this point. Breakout, pullback, getting intra-bar pullbacks, the low of 13 to the high of 14. So this bar, bear bar, bigger bear bar, even bigger bear bar, this might attract profit taking. It's unsustainable. It's good for the bears, but it might attract profit taking from the bears. So when the bears become buyers and the bulls are always buying, that can create a pullback. 15, disappointing follow through for the bears, but weak reversal attempt. Is 15 going to reverse 12 through 14? Probably not. So traders might sell above 15, sell to close 15. There's reasons to sell because it's a bad stop order buy. And traders sold in the close of 15, made a scalp, but 16 was disappointing for the bears. So somewhere in here, there's an implied low 1 short, and the follow-through was bad. 16 closed above its midpoint, broke out to a new low, could not close below these lows, and again closed above its midpoint. So not ideal for the bears, and because of that, we may have to pull back deeper, maybe to these breakout points, the bar 10 or bar 13 low, maybe even all the way up to the bar 12 low. 13 created a breakout point here. So 16, bad stop order buy signal bar, but we have a couple of sell climaxes, and now we're far from the moving average, and that increases the chances that we pull back deeper. 17, vacuum test of the breakout point that I had drawn, but strong enough bull bar, second leg up likely. So rather than sell the close of this bar or sell directly above this bar, traders might wait to sell. Bulls might hold on to their positions if they bought, looking for a second leg up, so the bulls are not looking to sell. Then you have bears If the bears think we're going higher, why would they sell here if they think we're going higher? And because 16 and 17 rallied the way that it did, a second leg up became likely, trapped traders at the high of 16. If you sold the high of 16, betting that's a bad stop order buy, you got trapped on 17, and then further trapped on 18. Now 18, very good looking bull bar, one of the strongest bars on the chart, but the context is always most important. If you take a bar out of context, you really don't know anything about the breakout. 18 looks great until you consider the bars to the left. And what is 18 doing? 18 is testing the breakout point at the 12 low. It's also completely below the moving averages in a bear channel. So 18, maybe not as good as it seems. Now, again, 16 through 18, strong enough that we'll probably get some sort of second leg, but because it's counter to the direction of the major trend, it can be dangerous to buy here. Even this isn't a significant trendline break. It's a significant trendline break of this breakout, but from bar 1, not so much. But it is enough that we're probably in some sort of broad channel or trading range at this point. Probably not a strong bear trend. You don't get bars like 18 or 17 and 18 in very strong bear trends. And then one more thing I want to talk about is if you're buying bar 18, let's think about the trader's equation. In theory, your stop is below bar 16, the start of the bull swing, so your stop is down here. You buy the close 18, and it doesn't matter if you bought above 16, you bought the close of 17, you bought during 18, or you buy the close of 18, it's all the same trade. If you bought down here, but you're willing to hold long, then it's effectively the same trade. The way I think about it is, in this example, if I bought above bar 16, and then we got bar 17, on every tick of 17, I'm thinking to myself, I'm buying, I'm buying, I'm buying. On every single tick. Same with 18. Close of 18, I'm buying. If I'm holding long, I'm a buyer. And there's no such thing as other people's money. So your risk is from the market price to your stop, not from the entry price to your stop. So even if you bought down here, if you're long on the close of 18, your stop's down here, your risk is big from the close of 18 to the low of 16. With that said, let's think about the trader's equation. If you're going to risk below 16 and hold long or buy the close of 18, you're taking a trade with bad risk reward. Your risk is big, and so you need high probability. Is it a high probability trade to buy the close of 18, stop below 16, and go for a target up here? To me, it might be 50% at best. And because of that, you'll have traders doing the opposite. You'll have bears selling the close of 18, stop up here, target down here. In reality, you'll even have bears sell the close of 18, stop a midpoint halfway to the target, the measured move target, so that they're risking half of what their potential reward is. So even at 50%, if they're making twice their risk on the trade, it's a positive trader's equation. But anyway, the point is, if you're buying bar 18, anytime you're taking a trade with bad risk reward, you're going for 1 times your risk for the target, you need momentum, you need probability in your favor. On top of that, you're testing a breakout point after a fairly strong bear breakout in a more bearish environment. So you really need, the risk of being long here is you're at the top of a trading range or bear channel. So you really need, ideally bar 19 would be a duplicate bar of 18 if you're buying here. And then look at 19. It's a disappointing bar. It's a doji. Where did the momentum go? So traders are asking themselves, was 18 simply a buy vacuum test of resistance? Because suddenly, where did all the buyers go? It looks like 18 may have been caused in part, maybe in part due to bulls buying, but also strong bears stepping aside, not selling down here, but then looking to sell up here. So disappointing follow-through bar 19. The risk for being long here is even further increasing because now there's proof that the momentum is fading. 18, good-looking bull bar, then a doji, and another doji on 20. It's really dangerous to be long here. High 1 signal bar on 20, but bad signal bar. It's a bear body at a breakout point, high in a trading range. Probably sellers above the bar, and then in this case sellers on the close. 21, now we have 3 bars down, second leg down likely, but also getting close to the 50% pullback level of the rally. There's probably support down here. So the market's getting squeezed. Sellers above, but buyers below. The question is, will the bulls be strong enough to buy here and then get another leg up? We went sideways, unable to break below 50%. 24, the bulls trying to get a second leg up, but look at bars 22 through 24. If we look closely, we will see 3 pushes up. 1, 2, 3. Not only that, but it's 3 pushes up and a lower high double top, testing the area where traders got trapped before. Let's say you bought the close of 18. You buy the close, you're not quick to exit, you get trapped. Market's retesting your entry price. So 24 becomes more of a sell the close bar. That's what happened on 25. 25, there might be some sellers below. Maybe if you're long, you have a second reversal, bear bar closing near its low. In an overall more bearish environment, I think it's reasonable to exit below 25. But selling below 25, a little more aggressive. 26, big reversal bar closing on its high, but still completely below the moving average. So now we have a high 2, but still at the top of a trading range. The signal bar is big. Think about it again from the trader's equation standpoint. You buy above 26, stop below 26. You bet on a trendline break, 2-legged retest, and then a major trend reversal. You buy above 26. 1 times your risk is here. And to me, there is not a 60% or better probability that we're going up 1 times the risk before we go lower. Because of that, the trader's equation may not be positive, and so you might have traders doing the opposite, like I said back here. So traders might sell above 26, stop above, target below. We also have a target, the bad signal bar 16. Bad signal bars often get retested. We didn't quite get there. And 12 through 16, second leg down likely. We'll probably get at least 1 tick below 16. So there are untested targets below. And the bulls really unable to break the moving average. So seeing this as a major trend reversal, I think is a little bit of a mistake because in general, the way I like to think about it, what I like to look for in a major trend reversal, I want to see a trend line break and then bars get completely above the moving average. So let's see if we can find a good example specifically for the bulls. This one's pretty good. Compare this to what we're talking about. Tight bear channel, it's a strong bear trend, but then a trend line break with big bull bars, consecutive bull bars, bars completely above the moving average. It doesn't matter that this goes from one day into another. And then 2-legged pullback, testing the trend. The trend's extreme down here, maybe the 73 high. That's a breakout point, probably support. You can see the market tested it to the tick, if not very closely. trend line break, retest, major trend reversal. But here, consecutive big bull bars, bars completely above the moving average. Also, how much of this trend was retraced? Even if we said the start of the trend was here on 29, here's 50%, at least 75% of this bear trend was retraced on that trend line break. So again, compare it to today. Is this minor reversal going to be the start of a major trend reversal? We haven't even got to 50%. Decent bull bars, but no bars completely above the moving average. Bars not crossing the 20 EMA. And so we got trend resumption. The bulls gave up. Support at a new low, but still more bearish than bullish. Bars below the moving average. Might be a bear channel, but this is enough sideways that we may enter a trading range. And if we, let's look at this. You see the market stayed in this range for a lot of bars going sideways. And we finally began to trickle down. And as we trickle down, you can see negative gaps. You can see many more bear bars than bull bars. Almost all the bars completely below the moving average. Consecutive bear bars, we're getting the bear breakout. And as we get further from the EMA, bull bar closing on its high, reasonable to exit. Shorts above a bar closing on its high, especially when you're far below the moving average. Here's a breakout point, and that might be a target area, but probably resistance here if we get there. And I think this chart is actually delayed, so we may have gotten there by now. I'm not sure. For me, trades today, I was looking to go short after. So through here, I did nothing. I was looking to go short after 12 through 16. I wanted to sell a pullback, and I thought 18, probably a bull trap. I think we're at the top of a trading range or channel, but I don't want to sell the close of 18. I want to see a disappointing follow-through bar for the bulls. That's what we got, so I sold the close of 19. But my expectations for the trade, I thought there was a high probability of getting a second leg down. I had my stop above 12, sold the close, going for 1 times my risk. I thought I'd get there in 1 or 2 bars, but I definitely wanted to see my entry bar close below its midpoint. So we sold off, rallied, I believe, and then sold off a second time. And as we began to rally a second time, I closed the position. But then, again on the close of 20, I sold this close, and I put my stop 1 times the range of 20. My stop was here. My target, I think it was stop here, enter on the close. I was going for twice my risk, so my target was down here. And I thought the entry bar was good, or good enough. Second leg down likely. I did expect a bounce at 50%. So around here, I thought we'd probably have a minor reversal, and we did. And I thought about selling more on the close of 24, but I did not. But I did think 25 had to just go. And then I thought 25 was good, and then we had 26. Right now, this is a mistake to me, but I exited above 26. And the reason for that is I'm short, and there's a second reversal against me. And it's sort of a mechanical default exit. My discretion, my chart reading is telling me I would never buy here. This is a low probability reversal. And so there's a part of me that wants to stay short after seeing 26, but because of the way my system is designed right now, I'm trying to follow the process and have discipline. I ended up exiting, getting trapped out above 26 on 27. And so overall, I think my entries were good. The trade management is just disappointing. Obviously, lots of room to improve, but that was it for me for today. And that's going to do it for today's video. So I really appreciate everybody for watching, and I hope everyone has a good night. Thank you.